Welcome to Set Schedule's Meet the Agent podcast, where we sit down and talk to some of our members to have conversations not only to get to know these wonderful real estate agents, but to also have conversations around various real estate topics. If you like this content, be sure to hit that like button as well as subscribe to our YouTube channel. Today, I'm being joined by Sal Salinas, who is with Century 21 Real Estate out of Diamond Bar, California. He comes with 9 years of experience, and some of his hobbies include mountain biking, hiking, and he's a former Cub Scout leader. Sal, thank you for joining us today.
Hi, Cassandra. Thank you for having me. I appreciate it.
So why don't you just tell us a little bit more about what's going on in kind of this crazy market right now?
Yeah, it's definitely been a whirlwind. I mean, going back to last year, starting with the pandemic, for me personally, I didn't know which way the whole real estate market was going to go, and it just kind of took off. It just, more people started, making a lot of moves. Uh, you know, where we're seeing a lot of multiple offers on every home, and it just continued throughout the year. And then for some reason, just turning the year in 2021, it just got even crazier. I didn't even think that could even happen. I personally had not experienced that, this type of market. Didn't think it could get any, as aggressive, and it did. So, now, starting January, February, and still to this day, we're just seeing, multiple offers again, very super aggressive offers, obviously over asking, above appraisal, removing appraisal contingencies, etc. And, even offering, the current sellers to have lease backs for 2 to 3 months, if not more, sometimes for free. Anything that you can kind of think of to get that seller to accept your offer. I've even heard of stories where, baskets were left at the seller's house from buyers. I mean, when you can think of thinking outside the box, I mean, it seems like that's what's going on. Yeah.
So, and you said you have never seen that in your 9 years of experience. You've never seen it like this. Is that right?
Correct. I mean, it's always been pretty, competitive. But I mean, just with the one, removing appraisal contingency, number one, is that means, that buyer has to be aware that they're offering a lot more than the asking price. And not only that, but aware that there's a good chance it's not going to appraise at what they're offering. And if they remove that appraisal contingency, they're going to be, on the hook for that difference. So they have to, number one, make sure they have those reserves or funds. And then also, the seller has to be assured too that if you're offering this amount of price, that the buyer has the funds to cover that difference.
So, do you have any insights as to what you think is kind of causing this like really crazy shift or?
I think there's a lot of factors. I think one is, number one, the interest rates. So that's really stimulating a lot of people or encouraging them to make a move and take advantage, right? So that could be, a lot of people selling their home, relocating. Like, for example, in Southern California, they could be selling their, maximizing their dollars in LA County or Orange County, then moving to the Inland Empire. So they can get, a bigger home or a newer home, just kind of upgrade, so to speak. And now that a lot of, employers or workers have figured out they can work from home, it doesn't matter where you live anymore, and on even so therefore too, people are moving out of state if they're already, secure their job, from home. I
So now
think
you,
another is, people with the low interest rates, they can refinance, cash out some money, buy a second home, or give that money to one of their children or grandchildren to help them buy a home as well. What else? I think I touched on second home, aka also vacation home. I think with the whole pandemic, everybody was just kind of tired of being at home, sequestered at home, so to speak. And you know what, hotels were closed, so they couldn't go to hotels or go to vacation, so they said, let's go buy a vacation home, and they can confidently, stay in a home with the whole family and not risk of getting sick. So I think that was also a big home, because I know vacation homes, all the destination areas, like I know like Lake Arrowhead, Big Bear, even the beach cities have seen a big demand.
so that's amazing. And So now, for a lot of people who are going in and buying these homes, I can only understand that if people are going to such length as, like, leaving gift baskets on the seller's door, and going above asking price and removing that appraisal contingency. What's some advice that you have that you would give to your clients, both buyers and sellers, as far as, what's the best way for buyers to increase their odds of having their offers accepted, and things that sellers should really look into to be sure, because a lot of times they're buying another home, right? You were saying that they were then moving to other areas. What are some things that both buyers and sellers you think should be doing in this market?
Yeah, that's a good question. So, for me, when I'm representing a buyer, um, so if we have to have right up front, I kind of just prepare them. This is what's going on in the market. You have to be aggressive. You got to be a quick decision maker. You can't be on the fence, or I'm going to take a week to think about it, because that house is going to be gone. I mean, nowadays, all you really need is one weekend to put it on the market, and by Monday or Tuesday, they're, reviewing offers and likely accepting one of those, or at least countering. So you just can't be on the fence. You have to be a quick decision maker. That's number one, because there sometimes with first-time home buyers, you're going to tend to, take your time and see multiple homes. And I get it. I mean, I wish I could provide that service, and they could take their time, but this market just doesn't really lend itself to be that way. You gotta be a quick thinker, quick decision maker. And sometimes it could be that first home, sometimes it could be the 20th home, but you gotta be able to at least be open to submitting, offers. Um, Also, just, having it's a little bit of a, um, I guess, unusual discussion to right away. You're dealing with first-time home buyers who have this, this great idea, or beautiful picture of buying a home, and you're telling them, okay, we gotta act quick. So with that too, though, you have to also explain to them, okay, this is what's going on in the market. You've got multiple offers. You're going to be competing with a lot of buyers. They're all, offering above asking, and a lot of them are, releasing appraisal contingency, or at least maybe writing in an escalation clause with that, where they'll pay a certain amount above appraisal if it doesn't appraise. So a lot of times the first time homebuyers don't understand that. So you have to just explain it to them. It can be scary, especially for these first time homebuyers. And if they're a young couple, they're, a lot of times they're thinking, why, I didn't think it was that aggressive or that crazy. And we're saying, yeah. So that's where you kind of have to look, how much this is your down payment. These are your closing costs. If you're going to offer above appraised value, are you prepared with using some more reserves towards that amount? And then I just tell them, I said, we just have to figure out what your comfort level is. Maybe removing appraisal contingency is not at their comfort level, which is fine. So, are you comfortable with putting, 5 or 10,000 above appraisal if it doesn't appraise? Most of the time, I mean, from my experience, my buyers are like, yeah, okay, I'm good with 5 or 10,000, or, maybe 15, but I don't want to take the risk of just, I don't have like a blank checkbook, so to speak, to write.
Hey.
So, yeah, definitely, those are conversations I just never had to have, before. It just really wasn't. A lot of times when you offered a little bit more, you can negotiate with the seller and say, hey, can we meet halfways? If it's a $20,000 gap, then, hey, can you drop it 10, and then, the buyer will put in the other 10. So that's a huge, difference, in this market. From the seller's standpoint, when I'm representing the seller, we have to look at offers. Okay, how solid are they? Because if the seller is going to buy a replacement home, the seller can't afford for, his buyer to fall through. They got to make sure that they can perform. So that's why, sellers are picking like the strongest offers. Not necessarily, in some cases, yes, it is highest and strongest, but a lot of cases, yeah, just got to look at the most financially strongest buyer. Look at the credit scores. Nowadays, we're all buyers agents are getting desktop underwriting approval, so you can kind of see the debt to income ratio, see what the risk factors are, right? So those are the things you got to look at. How fast can they close, or can they work with the seller? Do they need to move out right away, or can they do an extra month of rent back or lease back? And in most cases, that's what the sellers are looking for.
And so for these sellers, what are some of kind of the things that you can tell them to look for? Because especially if they're a first-time seller, what are some things that you would advise them to look for in a potential offer as a real estate agent? Things that would kind of indicate, aside from like credit score, things that would be obvious for financial security of that offer?
There's quite a few things to go over. There's I sit down and review the offers. I personally provide like a summary of the offer. We go over it, tell them what all the terms mean, what type of loan do they have. Is it, obviously, if it's cash, that's pretty cut and dry. If it's conventional and FHA, and kind of explain them what to possibly expect between the two. FHA loans can be a little bit more stringent on the condition of the home. If the house is in dire need of repairs, it probably won't qualify for FHA, and it can, but it's just going to require repairs, and in most cases the sellers just don't want to go through all the through that process of repairs. But at the same, they might not have the liquid money to do those repairs. They might not have those out-of-pocket expenses, right? So they just really need the net proceeds from the home to buy their next. So in that case, we can advise them, well, conventional is not as stringent. You may consider a conventional.
Gotcha.
Yeah. So other things is, you mentioned that credit. If a good offer should come over with a proof of funds. So if they do offer above appraised value, we want to make sure that they do have the funds available, whether it's liquid or in a 401k, or possibly, it could be, gift money as well. What else? And then just other, not so much financial terms, but also like just terms. Are they willing to cooperate with the seller? Just like I was mentioning earlier, do they need to occupy the house right when we close? Can they give them 3 or 5 days, so the seller can move, or does the seller need 30 days? Or, can they do a little bit longer lease back? In some cases, some sellers are buying a brand new home and they're kind of waiting on that builder to finish the home. And because it's a new home, that could have delays in itself. You have just the builder delays, and then you have, city inspection delays. So that in itself, the buyer would have to understand what he's getting into and be able to cooperate with the seller.
Awesome. So I think that's amazing advice for both buyers and sellers in this crazy market. So just fun question, or a little bit more of a conversational question. Do you see the market, do you see any signs of this changing, or has it stayed pretty consistent for the past, let's just say quarter or two?
So yeah, it's a good question. So I would say, within the last month or so, I started to, I could see some indicators just from my experiences that it's kind of leveling off, or just not as aggressive. It's kind of like backing off a little bit. And then I'm seeing, a lot of like articles that there's indicators that things are, leveling off or slowing down. So I could definitely concur with some of those articles. And of course, that just, speaking, in Southern California. I do think it might just level off. I don't know if it'll, prices would dip, but I just don't think that aggressiveness of, the offers being over appraised value, it will continue. But I don't think prices will be dropping.
So if you had to give any kind of just general advice to a prospective seller right now, what would you advise them? Is now the time that they should be looking to sell, or, should they wait?
Yeah, so if they've been on the fence of waiting for that, perfect storm, I mean, it seems like, we're right at the tail end of that. And if they're going to make that move, yeah, do it now. Yeah, because potentially they could, leave some money on the table. Absolutely.
Awesome. Well, thank you so much, Sal, for sharing all your wisdom and insights and sitting down with me today. Was there anything else that you wanted to say to potential buyers or sellers?
Uh, no, I mean, for me personally, I'm just looking forward to a more, somewhat normalized market, so it's just not so crazy. I like to give, like to see the first time home buyers have a good opportunity at homes and not get so outbidded on every home. I like to see them, have that encouragement versus, the discouragement. Because some buyers have just kind of backed off. I've had some buyers that just say we can't buy a regular home, and they've opted to buying a mobile home in the meantime because that's all they can get for now. So I just like to see like a good, chance or opportunity for the first time home buyers.
All right. Well, I think that is wonderful advice for both buyers and sellers. Once again, Sal, thank you so much for taking the time to talk to me and sharing your expertise and your experience.
Yeah, 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 of course, of course. Thank you very much for having me.
All right. Thank you for joining us on the Meet the Agent podcast. And once again, like and subscribe for more.